Hello, Bob, and thank you once again for joining us. Last week saw a surprise in the geopolitical risk aspect in the markets, with the dollar bouncing on the confirmation of Biden for US president. But no real news about macroeconomic data last week. Can we expect more news on the economic calendar front this week?
Quite a week ahead for the US dollar. Key stats include initial jobless claims on Thursday and prelim January private sector PMIs on Friday. Jobless claims, service sector PMIs, those will be the key drivers for the dollar and market risk sentiment. Obviously, any spike in jobless claims and a slump in service sector activity would spell out some doom and gloom for the US economic outlook. Some buffer, however, with obviously anticipation of stimulus from the Democrats. For the euro, busy week, ZEW economic sentiment figures, key driver in the early part of the week, and private sector PMIs at the end of the week. Obviously, Germany and the Eurozone numbers will be the key areas of focus. Lockdown measures are likely to hurt service sector activity further, so the markets will be looking for a pickup in manufacturing sector activity. Main event of the week, however, is the ECB monetary policy decision on Thursday. Lagarde spoke midweek last week, talking of remaining optimistic towards the economic outlook and standing by the ECB's projections for 2021 in terms of growth. This is based on the fact that the ECB incorporated projections of lockdowns until the end of the first quarter. For the pound, we've got inflation, retail sales figures, and private sector PMIs. Expect retail sales and private sector PMIs, service sector activity in particular, to be the key drivers. Inflation, we're not going to be too concerned until the new year. January numbers, obviously we're going to be looking for price stability post-Brexit. Any pickup in inflationary pressures after Brexit, and that's going to impact on consumption and the economy.
So all quiet on the US front, but I'm sure traders will be bound to watch out what's going on in the European sessions and what's coming out from the European central banks. In the meantime, let's focus on commodity currencies. Has COVID-19 affected the commodity currencies as much as it has the rest of the globe, specifically the United Kingdom?
Yeah, the Commonwealth countries have fared better economically compared to Britain. Obviously, the UK's in another lockdown, so it's suffering heavily amidst its vaccination drive. So key in terms of improving global trade terms and a pickup in commodity prices is obviously, an effective global vaccination to then return, economies to normal and drive demand. So we're going to be looking at consumer and business confidence and consumption near term, and obviously unemployment figures from the Commonwealth countries. In the week ahead, there's plenty of data to consider, and obviously the BOC's in action as well, though we're not expecting too much from the Bank of Canada, considering the pickup in crude oil prices through the start of the year, up 9% since the end of last year. So global trade terms, looking at China's economy, and obviously recent data has been pretty positive, so that's providing optimism, and obviously we're expecting stimulus from the US government to drive demand, and obviously as vaccinations begin to roll out, we're expecting the economic recovery to support global trade terms and support the Commonwealth currencies.
In the meantime, let's focus on our Asian giants, Japan and China. How's it faring for the yen and the yang for next week?
For the yuan, next week, busy start to the week for the markets. We got China's fourth quarter GDP numbers on Monday due out, along with the industrial production, fixed asset investment, retail sales, and unemployment figures. Obviously, the GDP number is the headline figure of the day, so expect plenty of influence there. We're looking at the Chinese economy as a precursor for other economies. As economic data from China continues to impress, we're expecting pretty decent fourth quarter GDP numbers, and the markets are going to expect a similar trend to sweep across the West as vaccinations roll out. For the yuan, we've got trade data that's going to garner some interest. Japan's getting hit by a new spike in COVID-19 cases, and obviously the EU and the US are also struggling. So what impact is that having on trade? So expect plenty of interest in these numbers in the week.
So data from the last quarter of 2020 is bound to have some effect on currency adjustment valuations. Let's turn our attention finally to geopolitical risk, shall we? With the tensions in the US, in the political side of things, on a boiling point, how will this affect the markets, and what do you foresee happening next week?
From the US in terms of politics, well, it's all about stimulus at the moment. We've got Inauguration Day coming up, so expect Joe Biden to be laying down his plans in terms of how to tackle the COVID-19 pandemic and his stimulus plans. And obviously going on from there, we're going to need to see the Democrats aligned in terms of Joe Biden's plans. Any sort of talk of going against or Biden's plans being too aggressive, and expect market risk sentiment to take a hit. a dive in terms of demand for riskier assets. Presidential, impeachment. Donald Trump's up again and he's being impeached next week. Trial. That's not going to have much impact on the markets. He's out. He's having no impact anymore on global trade terms, foreign policy, or anything for that matter. So we can expect a muted impact from there. So it's all about Joe Biden, the Democrats' blue wave, and obviously fiscal stimulus and tackling that COVID-19 pandemic.
Well, that's all for today, Bob. Thank you so much as always for your feedback and input. And I'll see you again next week. That was The Week Ahead with Bob Mason of FX Empire. In the meantime, stay up to date with all the latest developments in the markets by following us on all our social media outlets.